Hey y'all, happy Tuesday. We're back with another money show. Please let me know if you can hear me. But we're talking about all the money that's going on around our pockets, as well as getting more money in our pockets. Today's topics are going to be about student loan payments skyrocketing. Then we're going to talk about interest rates. They actually stay the same, but how does that affect us? And I wanted to specifically talk about the Celtics and how they sold for a record $6 and something billion. I do like basketball, but only playoff basketball. So I'm not like a athlete type of girl, sports girl. But I mean, I can see a good investment and want to talk about it. And that's what we're going to do. So we're going to talk about unaffordable student loans. And when I say that, I came across an article on Fortune where people's student loans were going up, in my opinion, astronomically. We are talking about going from $250 to $900 and $500 to $5,000. And I was like, that's absolutely crazy. It's affecting those specifically who are on income-driven federal loan repayment plan. Since Trump is in office again, he is doing a lot of changes in the Department of Education. And this article focused on that a lot of people were getting notices that their student loans were skyrocketing. Now, Biden's SAFE program was stopped by a judge, but if you were in his program when he was in office, you don't have to worry about anything until December 2025, which is good. But if you were in other things, you are kind of screwed. Another thing that people are screwed on is if they were trying to do the student loan forgiveness, if you signed up for like nonprofit government careers. I know at least one person that this has benefited from. She got over 6 figures of her student loans discarded because she was in the public sector for 9 to 10 years. But Trump has stopped a lot of this, and he's made it clear that that's his goal. And he has stopped the application for income-driven repayment and consolidation. Which led me to believe there are 2 other people in this stream. How much is your student loan payment if you have it? Please put in the comments. I'm going to type it, please. How much is your student loan payment? Also, please let me know if you can hear me, because I'm curious. Mine, when I had one, was over $1,100, $1,141 to be exact, just for reference. That was because I owed $160,000, and that's how much they wanted me to pay. And immediately when I knew that was going to be my payment, I was like, this cannot be my whole life. It can't be. So specifically to the article, this is the title: From 500 to 5,000, millennials are watching their monthly student loan payments skyrocket under Trump and panicking on TikTok. The things that I highlighted was from $500 to close to $5,000. This particular student loan borrower is a dental student, now dentist. And because of his dental student loans, her fiance has had to get on top of principal payments. Now they aspire to buy a house, and they are saying that house is essentially unattainable for the next decade because the amount they're paying on a mortgage, they're going to have to pay in the amount of a $5,000, student loan payment. Now mine was not $5,000, but it was $1,100. And that used to be a mortgage, or it's a good chunk of a mortgage. So I just cannot imagine. Now, students who are enrolled in the SAVE plan, their forbearance is expected to end later this year, and their servicers expect first payments to be due no earlier than 2025. But I hear that if you're trying to call and get information about what's going on, if it has increased, or if you're going to see if it's going to, you can't even get on the phone with people because he's fired like 50% of the workforce. Contacting the department may be a struggle. Close to 50% of the department is in the process of being laying off. And Trump has repeatedly stated that he plans to shut the department down entirely. So for every student loan borrower, it's important to stay on top of your payments. And I agree. This is kind of why I believe like it's important to have some urgency in life. I did not know this was coming down in the pipeline. But I feel for people who still have it. And I want people to get to the other side where I'm at, where I have problems now, but I don't have to worry about my student loans. So when I say that I had to pay that $1,100 a month, paying it off has given me so many things. Like I was able to quit my stressful job. So the guy who now has a $5,000 monthly payment, I was a pharmacist. So I do know what it's like to have like the high amount of student loans from going to graduate school, but $5,000 is ridiculous. I don't know how much dentists make, but I don't think that is fair to have to pay $5,000. Paying it off has helped me pursue different business opportunities. Like I was able to quit my job. I wanted to start a business. That business has failed, but that's okay. I'm trying to fail quick so I can figure out what works, right? And it's also helped me, like since that $1,100 is now freed up, I can do my 401k and now I can do a little bit more investing. So yeah, it's a little tricky. I feel bad for them. And people are rightfully frustrated because we were told to do everything right. A lot of these people who are affected are millennials. I'm a millennial. And we're told to go to school. We're told to be law-abiding citizens. We're told to pay our bills and be honest. And it just seems like they weren't honest with us. For them to be able to go so high and cut out so much of your free money to go to bills, that doesn't seem just. But so I understand the frustration. Even though I don't share in having to pay it, I understand the frustration. Which is partly why I'm just like, the government should care about us, but I know they're not. And that is why I kind of took retirement into my own hands, because now they're trying to get rid of Social Security. That's going to be devastating for a lot of people who are at retirement and the people who are putting money into their retirement. The article also shared that trade schools are gaining popularity. And I agree, because I've had to have my plumber come out more often than usual. And I give that man at least $300 to $400 a pop. And he's worth every penny. I do not mind giving him that money, because when your plumbing's wrong in your house, you're willing to pay. I mean, as long as it's not like thousands of dollars each time. Same thing with your AC, same thing with your electricity. So yeah, I think people should be electricians and mechanics and plumbers, because this is ridiculous. Even though I did hear that private equity is coming after that too. So I don't know if you can even be your own boss. You will be able to be your own boss as a plumber in the next 20 years. College is only going to be for the rich again if it keeps going this way, which is how it was probably 100 years ago. But that's not good. I think he thinks that this is good, but it's not. It's not good for American society, because if you're honest, a lot of our contemporaries, people around us in our society, we're not as smart as we used to be. If we don't have smart citizens, that's not good for us. We're not going to grow as a country, and especially if we care about competing with the world. And it's not good for American safety, because best believe the people over there in China, I'm going to stick with China. I don't know about Russia. Africa, China, they are educating their citizens. Why are we going back and saying our citizens don't need to be educated and really don't need to have anything past a high school education? Because if you can't afford it, you're not going to be able to go, and that's okay. I think that's interesting. I don't think it's good for our safety or our society. Switching topics, our federal interest rates. So interest rates are staying the same. The Fed says the economy is in good shape still. So that's why they did not increase the rates, but they did not decrease them either, because tariffs are expected to be inflationary, because our current president is going through with his tariffs. It kind of has to. That was an election promise that he has. And come April 2nd, that's when the hammer is supposed to really drop, right? But what does that lead us to do? If we're trying to buy a home, if the rates aren't going up federally, that's good, but the rates still to buy a home are still at 6 to 7%. That last non-change, or he decreased it, but the rates didn't decrease that much. And then if you're trying to buy a car, that's also going to affect how we're going to do it if we're expecting for tariffs to cause inflation type of situations. If we have inflation type of situations, the price of the home is going to go up, as well as the price of cars are going to go up. And our economy is based off of people taking out loans and spending their money. People aren't going to take out personal loans, no business loans. It's like a cascading effect. So I think it's something that we're going to have to reckon with, because we're in a position right now where he's not increasing the rates, but he's also not decreasing the rates. It's like a wait and see type of situation that we're in right now. And then the last thing is, if you happen to be on social media, you probably got wind minimally that the Celtics were sold. I am not a big sports fan. I don't watch sports like that. But I did see this, and I thought it was interesting that the Celtics sold for a record $6.1 billion. And the previous owner bought it 2003. So that is 22 years ago for $360 million. We are going to go to the actual article real quick, where I found it on Yahoo Finance, where it says NBA Celtics to be sold for a record $6.1 billion to group led by private equity mogul Bill Chisholm. So this person, Bill, let me go back here. He is a mogul that agreed to buy the Celtics, who are the reigning champions and the most decorated franchise in league history. And I highlighted that because I think that's probably really important to think about. But he bought it at a record level. I thought it was the highest, but apparently in 2023, another team, Washington Commanders, was bought by NFL. This is football, was bought for $6.05 billion. Regardless, though, this man saw the value in it and was willing to pay the price. And I think the lessons that we can learn from that is that this guy, who was the original owner, who bought it at $360 million, some people probably thought that was high back then in 2003. He was wise enough to see that it was priced right enough for the money that the Celtics was bringing in to pay for what he was paying for, and that there was room for it to grow. I also think it didn't hurt that the article says that they are the most decorated franchise in league history, which, because I'm not a sports girly, I thought that was the Lakers, because you hear about the Lakers all the time. I knew the Celtics were also like in the territory to contend with the Lakers, but I didn't know they were the most decorated. But I think that really shows that we need to continually reinvest in our assets to keep and propel the value. So whether you're on a home, whether you're on a business, there are going to be intervals in time, whether it's every 5 years, every 10 years, where we need to reinvest in our assets and not be stingy just because we have assets. Reinvesting in them is also important. I do not think he would have got the $6.1 billion if throughout the time of owning it, he didn't invest in acquiring the best players, making sure that if they weren't always championship teams, they were playoff teams, putting money that you earn from the asset back into it. I think that's the key to it. And I think it also teaches us to hold assets, not liabilities, for a minimum of 20 years. I think that's like the magic number. And I say that because I actually have an asset that I was like, oh, it's getting up there. And I'm talking about a couple $100,000. And I'm like, maybe I should do something with it. But I stopped and thought, I think you're thinking small. And I think you're thinking small because you've never had money like that. So $200,000 to you at least seems like it's a lot. But I said, imagine what it would be if you could just wait until it's $1 million. And that's when I was able to decide I'm not touching that asset until it's $1 million. And it hasn't been, I think it's been 10 years now. So I'm waiting. And I'm not saying in another 10 years I'll think about reevaluating. I really think I'm not going to touch it until it's $1 million, because it can't get there as long as I don't touch it. But if I'm touching it every $200,000, it's never going to get there. So yeah, that's pretty much it. I thought it was cool, and it was very inspiring to see that this man, let me go back. Where is it? This is kind of small, but the owner, his name is Wick. He purchased it at $360 million in 2003. And that is a 1,594% gain, or 13% annualized when each year that he owned it for 22 years. That's amazing. All because he stuck to it and didn't sell for at least 20 years. As far as like, if I was able to give myself a raise this pay period, yes, because I'm still dollar cost averaging in the down market, and it has been down the last 2.5 weeks. It's actually still kind of down this week. So yep. That's all I'm doing, average, to keep myself motivated to keep getting this money. But that's all I have right now, guys. Thanks for hanging out with me. I will see you guys next week. And until then, have a good night.